Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings to talk about strategies, tips, techniques, share success stories, and support each of you. On yesterday's training, if you missed it, I encourage you to go back and view it. We talked about the importance of running your branch like a business. And we spent about 30 minutes talking about what that means and things that you could do to make sure that your business is successful. Your branch should be a very profitable enterprise. But in so many instances, we see individuals sign up to be a branch office or what we call the opportunity fund, and then it's just some side activity. It's not a focus of theirs. One of the things that we can do to improve the probability of success is to create a business plan. And so that's true for any business, and that's certainly true for the clients that we work with through the program. But from your perspective as a branch, we yesterday asked, how many of you have a business plan? And not many of you do, at least for this business. So if you wanted, you can go to guaranteedfunding.org. So this is not our normal page for the branches. This is different. Normally we spend time on chapmanloanprogram.org. But on guaranteedfunding.org, the home page is the link to the Access to Capital program. This is what we were mentioning, that if you wanted to participate in as a branch, you could. With that, we're going to create a business plan, and then it does provide a minimum of $100,000 of working capital for your branch. So first off, wanted to make sure you knew where to access that. So it's the home page of guaranteedfunding.org. But primarily what I wanted to do today is talk about business plans and the importance of having a business plan. And I'll give you a quick tour of the software that we use. So when I worked for the SBA, we used LivePlan, which is shown on the screen. When I left the SBA and became a full-time college professor, I taught the entrepreneurship course, and we worked with students to build and start small businesses, and we used LivePlan. So to no surprise, we continue to use LivePlan through our program now. It is not free, but we pay for it for our clients. So again, if you were to enroll in what we call the Access to Capital program, which is real easy, it includes, there's no upfront cost, of course, and it includes LivePlan, which is our software, our cloud-based software that we use to create a business plan. So again, no cost to the participant, we pay for it. So it's not free, it's just we pay for it. The participant doesn't pay for it. So let's talk a little bit and dig in and look at what's included in a well-constructed business plan. So this is a new account I just created, so there's no content yet. But we can get in here and we can start to see how LivePlan is structured. And so we work with the client, or in your case, the branch, to build this out. So when we go into plan, so there's different tabs here. We're going to focus on the first tab right now, which is the plan portion. And so then you can see that there's subsections of the plan: the executive summary, the opportunity, the execution, the company, and then the financial plan. So these are elements of a very comprehensive business plan that is accepted by most lenders. So the way that the software is developed, it provides a lot of prompting for the participant. So for instance, right now we're clicked on executive summary. So it gives us a description. The executive summary leads off your plan, drawing readers in with a short, concise overview of your key points. Anyone should be able to understand your business by simply reading this part of the plan. If you're writing a business plan only for yourself or your team, you may not need an executive summary. Now, when we're building a business plan, normally we're building it for the lender. because the lender will very likely want a business plan so they understand what we're doing, what we need the money for, and so forth. It's true that maybe you're not looking for funding, and so it's just an internal use, as you would say. But in general, we're developing this to prepare a loan package for funding. So then we can go start the summary. And so then it is very intuitive. It gives us a chance it gives us promptings, instructions. We can get examples, and then we type in what we want to type. What's really nice about it is you can copy and paste, because some of you may have already started to put together some business plan elements, so you don't have to start over. You can copy and paste it. And then also it has the ability to just skip the sections that you're not sure about. So we can skip those. So we can put, I'm done here for now. Let's see here. Let's get back to executive summary. Okay, so then now we'll go into the opportunity page. So the opportunity page is broken into multiple sections. It talks about the problem. What is the problem that we're solving? So for instance, from a branch perspective, what we're doing is we're solving two problems, aren't we? We're increasing financial literacy, and specific to small business financial literacy. And then secondly, we're creating fundable businesses. And so this is where you have to stop and kind of think about how the wording is. What are the problems, and then what are our solutions? Target market, we were talking about yesterday. This is incredibly important to know who our target market is, because if we don't know who our target market is, how are we going to reach them? So we can, for instance, click on target market, and it gives us a little bit of a description. Also gives us some examples. But the bottom line is we need to know who our target market is to be able to effectively reach them. And so, for example, from a branch perspective, some of you are targeting chamber members. Some of you are targeting newly formed businesses, because you can access that through public records. Some of you are targeting turndowns. And what I mean by that is you're going to banks and loan brokers and MCA brokers and asking for their declines, the people that didn't get approved for them. So there's different ways to go about it. It could be that we're working through BNI, for example. So I'm not here trying to help you write the business plan, but showing you what is included in a thorough business plan that could be helpful both for your branch, but also if we're going to go to funding. We identify our competition, both our direct and indirect competitors. Talk about execution, which means what's our marketing plan and our sales plan. Breaks down into operations, and then we can even put in key milestones when we think things are going to happen. Company information: who owns the company, who's on the management team, are there advisors beyond the management team, beyond the owners? And then we even get into the financial plan, where we build in revenue and expenses. Now, a lot of the financial plan will actually pull in from this next tab, which is forecast. So in general, think of plan as the words in your business plan or in the client's business plan, where forecast is more about the numbers. So we're putting in numbers, our revenue, our direct cost, personnel expenses, assets, taxes, dividends, cash flow assumptions, financing. And from this, we can create anticipated P&Ls, income statements. You'll hear us talk about balance sheets quite a bit, and even cash flow. So again, anyone that's enrolled in the Access to Capital program, this is a big part of what we're doing, is helping them complete a thorough business plan. I think sometimes some of you confuse, and let me go ahead and pull it up. So we have Chapman Loan Program. This is mainly what we focus on, because the Chapman Loan Program is providing the structure of a fundable business. So I think that makes sense. Everything's listed there. That's what we normally talk about. When we're referencing the access to capital, it's not doing these things. It's building out what we call the loan package, and the business plan is an important part of that loan package. And so then we get over to the business plan software that we use. The pitch, often we'll skip the pitch. If you've ever watched Shark Tank or these different types of competitions, the pitch is where we can go in and create kind of a one-pager that, or close to a one-pager that very succinctly pulls in these different elements. And so it's somewhat of an executive summary, but it's just presented a little bit different. We can go into benchmarks and we can actually put in our industry. So let's say that we say that we'll go with management consultants, I guess, maybe is the closest category. So it gives us our different codes, but we'll go with management consultant. We'll pick this. Well, when we do that, it provides industry-based comparison. So it knows what the gross margin is in general for companies that are in that industry, operating margin, net profit margin, and so forth. So this is great. And we can also connect it with QuickBooks. So it not only tracks what we think is going to happen, of course, QuickBooks actually tracks what is happening. We can build out a schedule of milestones. And so what that means is when we think things will happen. So let's say that you sign up as a branch. So we'll say that you did that today. So we'll make that as our first milestone. Well, what are some other things that we would want to do? Well, if we're going to sign up as a branch, we need to get our client agreement ready for use, because we're going to provide you an editable version of the client agreement, but you need to take our information out, put your information on. So let's say that you plan to have that done by Saturday. That gives you a couple of days. I'm just giving you examples, but the point is milestones can be helpful for people that want that structure. So we know that getting a fundable business is a 30 to 60 day process. And so we could even put in go to funding. We anticipate that being 60 days out. So that would put us at March 1st. So you understand the concept of schedule. Dashboard is kind of an integration. And there's always these little videos, but it's an integration with QuickBooks, which I made reference to a moment ago. So what's the point of what we're trying to accomplish today? If you are an owner of a branch, which would have happened most likely from right down here, then this is a significant opportunity to help others and generate a lot of income. But as we've been discussing recently, it's important to treat your branch like a business, to treat it like a hobby. To treat it very passively is unlikely to generate success, or certainly not optimal success. So if we do want to be a branch and we do want to make money helping people and we do want to run it as a business, then you can consider plugging into what we call the Access to Capital program on guaranteedfunding.org. And it allows us to work with you to get, of course, funding for your branch. There's no upfront cost. But also prepare for success, such as the business plan, as we've been talking about. So with that, let me open it up for questions. Who has questions on starting a branch, running a branch, getting funding for your branch? What is it that I can help you? We're on February 1st, so it's great. We're starting a new month. We've asked all of you to schedule a reconciliation so we can look back at January. How did January go? Did it meet your expectations? And of course, if we're using a business plan, then we would have specific expectations. We would have a financial forecast with specific revenue streams. So we could add revenue stream. We'll call it enrollments in startup program. And so when we add a new revenue stream into live plan, we have to determine what categorization is it. And it's in unit sales. So then we hit next. Then it asks, is it going to be always the same or will it vary? Well, it's going to vary because we're going to have to grow our branch. So we'll do vary. So then it allows us to put in. So we're already past January now. So we would start with February. So for instance, and we could project it out more than 1 year. We could make, right now it's showing this year and next year, but we could actually take it out 3 years if we wanted. But let's just say here, all right, so for February for our branch, we plan on enrolling 8 clients. And in March, we think it'll grow a little bit. And then, you know, our goal is to keep growing. And we probably want to grow to the point that we're helping 1 client a day. So let's say we pick up a little bit of speed here, and then starting in September, now we're at a client a day on average. Just this quick, simple. So over the course of the rest of the year, we're anticipating that this branch would enroll 223 clients. So that's the units. That doesn't tell us dollars. We have to get to dollars. So we go over here and then we say, well, how much do we get for each one? Well, in this case, you're getting paid up front, and then secondly, you're getting funding as a performance fee. So we're getting $2,500 up front. So we would anticipate your income from that revenue stream being $557,500. But there's more revenue, isn't there? So let's go add another revenue stream. So we're going to add another revenue stream. And the second one, we're going to call it performance fees. Now, performance fees will fall under the unit sales again. And then it's asking how many. So there's going to be a bit of a lag, because if we enroll 8 clients in February, how many clients' performance fees do we think we're going to collect in February? Probably none, because these clients have to go through the process to become fundable. So there's going to be a lag. So let's say that we don't expect to get paid the 8 people that we enrolled in February. So we got upfront money, but we don't anticipate getting the performance fees until April. And if you remember, we were projecting growth of 2 a month. So now we're just going through and projecting that that 60 days later that the clients will get funded, and we could continue on. And then we determine, well, what's our revenue? Well, you have to determine, most of you are going with a performance fee of between 10 and 20%. And so let's say that you went with just 10%, average capital raise is 250,000. So you're making a $25,000 performance fee on each. So again, I'm just doing a quick summarization, but you can see that now we can break down income. Now, of course, there's going to be expenses as well, right? Because you're going to pay yourself, you're going to pay us our portion, and so forth. But let's get back to the questions that you all have. Anwar wants a call right afterwards. I do have an appointment right afterwards, so Anwar probably won't be able to call you immediately afterwards. I do want to make sure that all of you are very comfortable using Calendly. Calendly is the way that we can schedule calls so we don't miss each other. But yes, Anwar, I'll do the best I can to call you between scheduled calls today. Ken's asking about access to capital, and I'm normally hesitant to bring up access to capital, which again is right here, primarily because it's not a resource that the branch offers. And so because of that, we don't talk about it much. But for those of you who are looking to have a more structured approach to running your branch, I think this is the best model to follow. It'll allow us to create a business plan and of course get you at least 100,000 of funding. So in the end, here we are, February 1st. We're 1 month in. We need to make sure that we've scheduled with each of you your monthly reconciliations for January. When you become a branch, we know, which I guess we'll go back over here. When you became a branch, there's terms and conditions. There's an agreement, things that we promise to do and the things that you promise to do. So obviously, you need to be aware of what you promise to do. And you need to hold us accountable, and we need to hold ourselves accountable to what we promise to do. So let's just make sure that we're working together to accomplish the goal. The goal is to help small businesses, to help them get positioned for fast funding. And the way that we do that is we enroll them in the Startup Business Funding Package. You're paid $2,500. Let's go back over to income. You're paid $2,500 for each one. So if you just accomplish these very modest goals that we've set forth, you should see about $500,000 of income this year by just enrolling people starting in February, ignoring January going forward. And then as we take those clients through and get them to be a fundable business and we go to funding, then you're paid again. And then you're paid off the back end, which is obviously even more lucrative. But I don't want to insult any of you because you all are entrepreneurs. You're the CEOs of your business. You're running your branch. I'm just simply asking for you to be cognizant of the importance of running this like a business. It should be a 6 or 7-figure business. So anyone have questions? Marvin has a question regarding funding sources, and that's a great point. So when we have a fundable business, we can go lots of different places for funding, lots of different places. So where the funding comes from, which it could come from the Chapman Fund, but it doesn't have to. Once we have a fundable business, then we can evaluate based upon the client's mitigating circumstances. So let's go back over here to the business plan, which we didn't put. One of the things that we would need to find out from Mr. Wilson is how much money does he need? So we'll go to financing. And so we need to figure out how much financing that he wants and what's he going to use it for, because based upon the client's mitigating circumstances, in other words, how much funding they want and what they're going to use it for, it will determine where we go for the funding. So don't worry at the front end about where the funding is going to come from. As you're working with clients on the front end, the question is, are you looking for money to start or grow a business? If the answer to that is yes, then the follow-up question is, do you have a fundable business? And usually you'll get the deer in the headlights look because they don't know what that means. Well, you can educate them, right? You have the 10 mistake PowerPoint to use. You should have an edible version of that. You have the comparison training that we cover here. So ultimately, you need to determine, does the client have a fundable business or not? Most small businesses are not fundable. They want funding, but they're not fundable. Therefore, it's very easy to enroll them in the startup package. And so that's your focus. With the startup business funding package and access to capital, our staff does all of the work with the clients. So you might say, well, oh my goodness, Tom, this live plan sounds great, and there's all these pages and all these screens and all this is going on. I'm not trained for it. Well, you don't need to be trained for it. That's specifically why, as a branch, we position it so you're able to focus on community outreach, client development, financial literacy, and then our team will take care of the implementation, because there is a lot to this. Not that we're keeping anything or hiding anything from you, but you're not responsible for implementation. So, as Thomas Kearns, let me see if Thomas is on today. He's not. But as Thomas Kearns likes to say, every day should be payday as a branch office. So, yesterday, did you get paid yesterday? So let's go through, because if not, we need to do something different today. We can't just say, oh well, or I'm new, or I don't know what to do. We've got to have a plan. We should be enrolling a client each day. You should get up in the morning with the expectation that you're going to be paid today. You're going to be paid today. So, Andrew, first on the list. Andrew, if you can respond in the Q&A, did you get paid yesterday? What I mean by that is, did you enroll at least one client yesterday, Andrew, in the startup business funding package that paid you? Did they enroll and did they pay you? Andrew, yes or no? Please respond. And if anyone doesn't respond, we're going to take a tough love. We're going to kick you out of the Zoom today, because we need feedback. You need to be cognizant of how your business is operating. And a business that's not profitable is not a sustainable business. Okay, Anwar, did you enroll anyone yesterday? Was yesterday payday for you as a branch? Bernard, yesterday. Was yesterday payday? Cecile, was yesterday payday? Charles, Eric, Ernest, Ernestina, Felicia. So I'm not here to beat you up. I'm not here to manage you. I guess maybe a little bit to motivate you, but we've got to get the mindset of, if I'm going to be a branch office, then this is a big deal. And I need to understand what the hell it is that we do, which is pretty much largely attainable from this page. And I need to implement. I need to be profitable. Not all of you, of course, but some of you just have the mindset, oh, I signed up, I'm not making any money. Oh, well, that's horrible, because there's people that need your help. There's people that need the financial literacy, and with very reasonable assumptions, your branch should make 7 figures this year. 7 figures. And I realize a lot of you are big hitters, and making $2 million this year isn't life-changing, but that's a good side gig. We need to generate excitement and enthusiasm and consistency. So with that being said, let us know what we can do to assist you. But today needs to be payday. You deserve to be paid today. You deserve to help. These clients need help, or prospective clients need help getting a fundable business. So get with us. Let us know what we're missing. You have obviously our contact information, and we'll be back tomorrow morning. Thanks, everyone. Have a great day. Bye-bye.